Dustin Tibbetts here, financial advisor with Jazz Wealth Managers. We are SEC registered financial advisors. We hope you'll check us out at jazzwealth.com if you need help with your long-term investments or just want help from a financial advisor. We are here for you. Well, today we're going to continue our Fin Tips category where we just really quickly teach you something interesting and then get out of your way so you can get back to work. And today we're talking about dividends. I get a lot of questions about how do dividends work, Dustin? I get it that they pay you money to invest in the stock, but how does it all work? And so what I did is I said, well, you know, they teach financial advisors, they teach registered stockbrokers how dividends work in a really sort of unique way. So I busted out the old book from way back in the day, dusted it off, and we're going to cover that for you today. Basically, when a stock pays a dividend, it means that the company isn't growing as fast as they were. Not always, but for the most part, it means that the company isn't growing as rapidly as it was when it was in its growth phase. Apple is a great example. For years and years, they were a great growth stock. They didn't need to pay a dividend. Netflix, Amazon, other examples. They're just growing like crazy. So if you're getting the value in investing in the company from appreciation in the stock price, meaning you invest in the company, stock price goes up, you have no problems because you're making money, then they don't have to take some of their money and pay you to invest in the company. Well, a company like Verizon, for example, or Ford, to name just a couple, what happens is when the company is so big or has so much market share, meaning they're the dominant player or one of the dominant players in their space, it's hard to grow. It's hard for Apple to sell more iPhones when they've pretty much sold iPhones to everybody. It's hard for Verizon to do their thing with telecom because they're killing it, right? They have so much market share. And so because of that, they have to entice you to consistently invest in them. And they do that by just paying you to invest in the stock. That's why we call them dividends. So when a company's growth starts to slow down, that's typically when you see that they will pay a dividend. Actually, if you take out real estate investment trusts from the S&P 500, as of now, there are 65 names that are paying a dividend of 4% or more. There are 27 names that are paying 5% or more, so it's really kind of an interesting time for dividend investors. Now, how dividends work, the logistics of how it works is actually kind of interesting. In the financial advisory test or the broker-dealer test that they give to stockbrokers, they actually use an acronym. It's DERP. I couldn't remember what it was, so I looked it up in the book so I could remember how they talk about it. It's called DERP, and that helps you understand what happens at each stage of the dividend process. So here we go. The D in DERP stands for declaration date. That is typically the day that you will see it on TV. If it's an interesting stock or the company announces a dividend that's greater, they're increasing it by a lot or they're decreasing it, that's usually when you'll see that on TV, and that's called the declaration date, when you find out how much they're going to pay, whether it's higher or lower than we were all expecting or they had promised in the past. So that's the first day. Doesn't mean anything to you other than, oh yay, I own the stock, or I'm thinking about owning the stock and I'm going to get paid this dividend for owning it. That's pretty cool. The next date is really an important one here for the investor, and that's called the Ex-Dividend Date, or just X date if you're talking about it. And that is the first day that the stock trades without paying you a dividend. Meaning, if you wanted to get paid the dividend that you heard about on TV from the declaration date, you would need to own the stock prior to the X date. What's really interesting, I get this question a lot, is the stock price on the X date, it actually drops by as much as the dividend amount. So I get this question, people will email and say, I saw that this stock finished here one day, the next day it opened 50 cents lower. What happened? What's going on with the company? And a lot of times it's just Ex-Dividend Date. They adjust the stock price because the seller in this case is entitled to the dividend, not you the buyer if you buy it on that date. So a little something you should know there. That's the X date. Now 2 days later, 2 business days to be exact, is R, which is the record date. Really doesn't matter to most investors. It's sort of an old school thing. It's called the record date, where the company actually takes record of who is entitled to get paid the dividend. If they own the stock before the X date, then your name is actually on the list. The company knows your name and they are getting ready to pay you. Thankfully, this is all automated these days, but back in the day, they actually used to write it down on a sheet. And if you can get your hands on some of those sheets, they're actually quite valuable. I have 2 of them. So the record dates are really not that important for you as long as you own the stock before the X date. And then the P, that's probably self-explanatory, that's payday. That's the day where you actually see the dividend get put into your account. So really the declaration date, it's kind of interesting, but it doesn't really matter to you. If you're thinking about buying a stock, then the X date is very important to you. A little interesting tip, they don't actually tell you what the ex-dividend date is. They actually tell you what the record date is, and you're supposed to know 2 business days ahead of time is the X date. So they don't actually post it out to the public. It's kind of, I don't know if it's misleading, but now that you know how this all works, you'll never be misled. So the X date is important to you, and of course the payable date is important to you. Now, in your account, what happens is, in your transaction history, however you find that, if you're one of our customers, you go into your account, you select transaction history, and then you will actually be able to choose dividends and see what day the dividends were paid. You'll see them line by line for every stock that you own that pays a dividend. So that's that. Now, you have the option of reinvesting your dividends. If it's in an IRA or a Roth IRA, something like that, naturally you want to reinvest your dividends. You want them to grow as much as humanly possible. If you happen to have a different type of account where you want to be paid the dividends, meaning you want them to come to you in the form of a check or transfer to your bank account, well, you can do that. A lot of brokerage firms will default to reinvesting your dividends unless you tell them otherwise, but know that you can actually do that, right? It could be sent to you. Now, you should know that outside of IRAs, Roth IRAs, SEP IRAs, 401ks, things like that, dividends are taxable. So it's not free money. You actually have to account for that. But again, with technology these days, a lot of brokerage firms will account for the dividends, and they'll actually hold back some tax if you want them to. Otherwise, know that you will have to pay the IRS when you get there. So I just thought I'd point that out, sort of the little details of dividends and how they work. If you feel this video was on track, maybe you'll hit the subscribe button or leave us a nice comment. If you think I screwed it all up, well, you can leave me a comment about that as well. It'd be nice. All right, thanks for watching, guys, our Fin Tips series. Let me know what you think. Quick, short tips to get to the point like we used to do back in the day, but we'll be back soon. We'll talk to you then.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interests comes